Hello and welcome everyone to the weekly commodity report. We'll be looking at the markets for the week ahead for the 30th of April to the 4th of May 2018. First of all, we'll have a look at some of the major news items we'll be focused on as we go into next week. So there are two in particular which will be trading at the Gold and Silver Club, which can have high impact on certainly gold, on silver, on the US dollar, on the commodity currencies. Those are Wednesday's FOMC statement and Friday's non-farm payroll. So those can have big impact certainly on the precious metals. They can have a lot of impact on the dollar, and they can provide some great trading opportunities. So as we go into next week, we'll be very focused on those news items at the Gold and Silver Club. In terms of the latest news on the commodity markets, first of all, we'll have a look at oil here. So we had the oil rig count on Friday, which showed an increase in the amount of oil rigs. So essentially, oil rigs have risen 5 this week. The US oil drilling rig count rose for the 4th week in a row and ended the month sharply higher as producers plan to boost output as they reap profits from crude trading near 3-year highs. We'll go over to that on the charts very shortly. Essentially, at the moment, I see the potential for a short-term swing trade if we see support broken from last week. So I'll be looking for a potential sell short opportunity in oil going into next week. It is also noteworthy that we have seen speculators cut US crude oil net long positions. So hedge funds and other money managers have cut their bullish positions on US crude futures and option positions in the latest week. So we'll have a look at that very shortly on the charts when we go over to oil. Moving over to gold, the price action on gold has been relatively muted over the last week. We've been sitting within a range of approximately $1,315 up to $1,330. It is noteworthy that gold speculators have cut their net long positions to the weakest now in 4 months. So essentially, hedge funds and money managers have trimmed their overall net long position in COMEX gold contracts. What is interesting is that the overall net long position in silver has increased over the last week. So we've seen a shift from long positions on gold over to silver, which again marries up with a gold to silver ratio, which is sitting very near to 80 to 1 at the moment, which typically suggests that there's more upside in silver as we go into May than gold. And we'll have a look at that very shortly on the charts as well. So we've got the FOMC statement next week on Wednesday, non-farm payrolls on Friday. So that would certainly provide a lot of volatility for gold going into next week and very likely some great trading opportunities. First of all, what I'll bring out here is we'll have a look at the US dollar. The US dollar will be very important going into next week. The US dollar broke out of 3-month highs after the ECB announcement on Thursday at Mario Draghi's press conference, and we just continue to really see the dollar drive higher. The euro sold off significantly, and on Friday as well, the US GDP data, initially we saw a breakout on the US dollar, but you can see where it has actually reversed into the close, and it's very overbought at the moment. So the US dollar price structure right now, and the point where it has actually reversed here as well, does suggest that we may correct going into next week, particularly if we were to see the lows of Friday get breached and we see a close below that rejection candle which is formed on Friday as well. If we move over and have a look, for example, at the euro here, and then we'll move over to gold as well, just want to point out to you that often this is the case, that the US dollar index will be an inverse reflection here of the euro US dollar. So if we move over to the euro, you've got the opposite scenario here. So whereas the US dollar has developed a rejection candle at an overbought condition and looks ripe for a potential short-term correction, the euro here looks like we may get a reversal going into the early part of next week. Just from a technical point of view, we've come into an extreme oversold condition. We've also bounced just off the 200-day moving average, and you've got the potential for a V-shaped reversal pattern as we go into next week. That could also play out on the US dollar as well. So I'm looking for some support here going into next week against the dollar, but it really depends whether we get follow through here as well. So if we go over to gold, gold has actually held up much better than a lot of currencies against the US dollar over the last week. So normally if you see such a significant breakout on the US dollar, you would expect gold to potentially weaken more, gold being priced in US dollars, but it has held up really well here over the last week. It's continued to bounce off approximately the 13.15 zone. There is a lot of support here on gold between $1,305 up to $1,315. The price structure into the close on Friday is actually a railroad, which often would signify that we could get a bit more follow through going to next week. Essentially, if you're looking at this on a 2-day chart, this price structure here, if you put those two candles side by side, they would essentially marry up and they would have a big rejection candle, very similar to what we're seeing on the euro at the moment. So if you're able to view this on a 2-day chart, that price structure would just represent a rejection candle here. And as we go into next week, particularly given the news items and how overbought the US dollar is at the moment, I would look for some additional follow through here on gold. It's just not quite ready yet. It needs to do a bit more work, break above certainly Thursday and Friday's high, and then we could start to see a little bit more follow through here to the upside. So I'm waiting on gold at the moment to give a stronger confirmation here of a signal, but certainly this will be in play on Wednesday and Friday with the FOMC statement and non-farm payrolls, which then brings me over to platinum. So I mentioned platinum last week as well, and platinum has come back down to the sweet spot that we look at for establishing positions here on a longer term basis for platinum. So if I move that out to higher timeframes here, you can see here where the 900 zone on platinum has been very important over the last 2 years as a point of reversal here, and we've seen over 5 bounces from this zone within the last 2 years here. So essentially, when platinum gets back down towards a 900 level, this is often a level where it gets bid. It's an accumulation zone here, and we look to take advantage of swing trade positions at this level. Also, again, as I've mentioned previously, the gold to platinum ratio is very extreme at the moment, where relative to gold, platinum is the cheapest it has ever been, and we are expecting a reversal here as we progress into May. So into the close here, platinum's closed around $916. It still needs to do a little bit more work in order to be able to build a further base here. It looks like we could have a double bottom in here, but we need to see a little bit more follow through as we go into next week. But I would definitely have platinum on the radar. Then again, moving over to silver. So silver's been interesting because the overall net long positions on silver have increased over the last week, more so than gold. Silver, going back to approximately a week and a half ago, was up 5% on the month and 3.5% on the week, with this breakout all the way up to $17.30. Silver has since given back a lot of those gains. So silver has essentially been much more vulnerable to the dollar strength here over the last week, and it has come back within another buy zone here, which is sitting approximately at $16.50. You can see a rejection candle has formed over Thursday and Friday here. Now we may see a bit more backing and filling on silver over the next couple of days here. It still looks a bit vulnerable to potentially coming back down to the next level here, which would be a major supportive zone approximately at $16 about 15 cents per ounce here. I think if it comes back to that level, it would represent a really great buying opportunity. I don't believe silver would spend much time at that level before getting supported. It marries up with the lows here going back over the last 2 or 3 months, over February, March and April. So I would expect support and buys to come in if we were to get as low as that. I don't know that we will. As we go into next week, I would certainly watch out for silver, particularly if it was to break above Thursday and Friday's highs here, because that would likely represent that the short-term low is in and we can start to see a rotation higher here to the upside. If you're looking to play it in the opposite direction, so if you're looking to essentially take advantage of possible further weakness in the metals going to next week, I would look at copper. So we've been short copper over the last week here. Copper typically does weaken as we get closer to an FOMC statement. We've already been short copper this move over the last few days, and Friday really broke down significantly in our favor. So I would be watching for the potential for copper to roll over and revisit the swing lows here as we get closer to Wednesday's FOMC statement. So if you're looking for further weakness in the metals, I would certainly move over and have a look at copper. Now moving over to crude oil, we'll have a look at WTI crude oil here, which essentially over the last week has continued to be range bound. The range that we're sitting within at the moment is $67 per barrel up towards just under $70 per barrel. So oil over the last week has been unable to breach and break above $70 per barrel. We've just continued to really be range bound here, just ricocheting between support and resistance. Midweek, we initially saw a breakdown in price after the oil inventories data, which showed an increase in gasoline and crude oil inventories. So initially we did see a sell-off that got supported into the close. Very muted price action here on Thursday and Friday. The oil rig count data on Friday, which showed an increase of 5 oil rigs, would suggest further weakness here for oil going into next week. And of course, we're keeping an eye on additional reports which will be coming out in the early part of next week as well. From a technical point of view on oil here, if it is able to roll over and break below Thursday and Friday's low, and certainly if we get a breach back below $67 per barrel, I would see an opportunity for a swing trade here, taking the price back initially back towards approximately $66, and then if we can get a break below that zone, so if we break below the weekly pivots here, we could see the price structure move back towards 65 US dollars per barrel for a swing trade. Overall, the trend is up, so it is within an overall upward trend. This would be taking advantage of a short-term move back towards the lower end of the channel here, especially if we just break through the weekly lows as well. I could see that happening because of the weaker price structure here we've seen over Thursday and Friday. It wouldn't take too much here to start to see the price structure roll over, and we have seen a reduction on the overall net long positions with oil over the last week. We might see some traders just taking off some profit next week, as well as we get closer to some major news items such as the FOMC statement and non-farm payrolls as well. So I would definitely keep oil on the radar here, because if we can break below the lows here from Friday, it could provide quite a good short-term sell opportunity. Now, on the flip side of that, it is of course possible that next week we'll just see a continuation to the upside, and if we do break above Friday's highs and also Thursday's highs, we could make another retest of $70 per barrel, and if we break above $70 per barrel, then we're going to be breaking above the 3-year highs here, and we'll likely see quite a lot of momentum behind that move. So really it is a bit of decision time. We've been seeing relatively muted moves here for oil over Thursday and Friday. I suspect next week we will get that confirmation on oil, providing a great swing trade opportunity. That has been the Week Ahead Commodity Report. If you'd like to find out more about our training programs at the Gold and Silver Club, if you'd like access to all of our news feeds, our fundamental data, as well as access to our live trading room program, all you need to do is go over to www.jointhelivetradingroom.com. So for more information on the private members live trading room, where you can get access to all of our fundamental data, our news feeds, as well as access to our live trading rooms during the week, just go to www.jointhelivetradingroom.com.